So how does everyone feel about adding a couple of days next week just to complete fixed assets, complete budgets, and collections from accounts receivable?
I don't know whether I should speak.
We can hear you, Stembele. You can go ahead.
Yeah, yes, I think that will be great because I think there's still a lot that we haven't covered.
All right,
Even
cool.
we're still struggling in labs, so that we can go there. Some of the things.
Okay, cool. All right, and then I think at the end of, I'll also share the video I've just shared in the chat now. I'll share it on the WhatsApp group, so you guys have access to it and you can use it as a supplementary material. But yeah, let's quickly, Sydney, yes.
Gideon, I just want to find out, after finishing the course, even if it's next week, after finishing the course, how many more days will we have before the exams, or is it discretional? If so, because I also think it's important that even after we have finished the course material in training, we also meet for additional 2 days just to go through the labs again as a group. I think that is important as well.
Yeah, so in my experience, Sydney, right, is that if you wait too long before you attempt the exams, you tend to forget a lot of things. And then if you also do it too soon as well, you might not be prepared enough. So my middle ground is always a week after the training. Take an entire week after the training. I would share with you guys practice questions and past exams material, just so that you see how the questions are set. All right, and we get most of our exams from exam collections. There's just a piece of software that you need to purchase. We can sort of find a way around that. Maybe one person gets a license, maybe I get the license, and then I take screenshots and I just share the screenshots with you guys in like an Excel document. But the average number of questions between 40 and 60. So if we can fit 2 questions on a page in a PDF, you would have 30 pages to go through, and it would give you an idea, of what the exam is like. And I think the exam prep is really, really important. Even if you are very experienced, your chances of passing is very slim, but the practice questions are basically past scenarios that Microsoft wants you to know about. Hence, a lot of the exams success hangs on the practice questions as well. Okay, so if we finish next week, I think I would give another 1 week for everyone else to just prep and finish up and prep for the exams, and then book the exams and go right. Luckily, the exam is online proctored, so if you have good connectivity in your house, you can actually write at home. You just need a device with camera, and you need a somewhat private room where you can take the exam as well, because someone is going to be watching you the whole time remotely online. All right, does that clarify that question?
How long is the exam?
It's average between 2.5 hours and between 2 hours and 2.5 hours. I don't think it's I mean, it could have changed now because obviously they keep making changes to the exams. If you go on Google and then you go to MB310, MB-310 exam. And then on the Microsoft website, so if you click on the learn.microsoft.com, and here go to the exam page, so you will find a lot of important information here on the exam page, like what the passing score for the exams is. Also, you can see the price of the exam, but that is for the US. For South Africa, I think it's about $50. So it's $55. So the exam it's quite reasonable for anyone writing in the African region, because there's some sort of rebate for us in the African region. So yeah, and if you want to see more detail, just go on the exam registration page and then just check out all of the details of the exams as well. So you can see that's it'll do a confirmation for that exam and just go through the process of building it for you. Yeah, so you should definitely check it out and look at. I think I would just have another session with you guys where I show you how to sort of go through the process of booking the exams, and at least then you know when it's time for the exams to be written, you'll be able to book it. You see, if I were to take this exam today, I get 75% discount as an MCT. And this expires in 2023. And then I also get an additional a 50% discount as a trainer as well. So I can choose any of these options to sort of claim that exams. Obviously, because I'm an MCT, I get a lot of rebates. If you also have a student card, I think you also can get, I think, 50% discounts if you have a student card. You can see here, if you have a work or school account, you can put it here and check eligibility. So if you put your school email address, it'll probably just ask you for a student number. I don't think they do any verification, but yeah, you might get a 50% discount on the $55. So we might end up paying close to 350 Rand per person for the exams. All right, but we'll deal with that when we get there. Okay. Okay, so first of all, let's talk about fixed assets. I have another session in the afternoon, so I also want to just make sure I was able to go through this module entirely. So the question is, what is fixed assets? In most organizations, one of the important item on your financial statement is a fixed asset, because over time an organization acquires assets. This assets forms part of the valuation of the organization, and obviously fixed asset ranges from equipment that are used on a day-to-day basis to permanent asset like a building. Also, more recently, there's also a lot of digital assets as well, but specifically this module in the D365 Finance and Operation is all about fixed asset, the asset that you can actually see, touch, and hold. So some of the fixed asset category would include things like a computer, it would include desks and chairs, and buildings, and pretty much vehicles also will form a great part of what an asset is. Pretty much everything that an organization owns and they use to operate the business are categorized as a fixed asset. Now, implementing a fixed asset is actually not that complex. There are just a few components that you need to know before you can implement a fixed asset in D365. So things like books. So we will go through the process of just defining some of those basic things. Like what is a book, for example. We'll also talk about other stuffs like, fixed asset groups and so on and so forth. But we'll get to that just now, and I will just show you guys all the things that I have planned for today. But I think it's essential in these ideas agenda. So we'll talk about configuring fixed asset components, and then we'll also talk about managing fixed assets. We'll talk about fixed asset acquisition, depreciation, and disposition as well. And then that integration. So the first topic on the agenda, the fixed asset component, would essentially just talk about all of the different fixed asset component that I've just mentioned now. So your books, your fixed asset group, your your types and so on and so forth. So we'll get a chance to sort of talk about all this terminology. As a non-accountant, I think basic understanding of this fixed asset component is essential. And obviously, once we've done that, then we will look at how to implement it in the managed fixed assets, and then also look at some of the configurations required to be able to set up fixed assets from scratch from a brand new legal entity. Then we'll go ahead and talk about, now that we are fully set up, how do you acquire an asset? So you can acquire an asset through a WIP, which is work in progress, like a construction project that an organization engages in. And at the end of that work in progress, the organizations can capitalize on the cost acquired during the asset constructions, in this case, a building. We can acquire an asset through a purchase order process, which would just be, you send out the requisitions we've spoken about earlier and go through the entire procure to pay. And at the end of the day, when you finally have the assets, you can basically put them in the asset register. And then we also need to talk about asset depreciation. And that's a very, very important topic. This is how you depreciate the value of an asset over time. Obviously, a laptop that you buy today is not going to retain the same value 6 months from now, which is what most organizations do, use the depreciation calculations to be able to reduce the value of that asset over time. And we have different depreciation types that we're going to talk about, like straight line, reducing balance and so on and so forth. These are the two most important and most popular one. And then once an asset reaches end of life, you may have noticed some organizations just disposes of some of their assets at the end of 3 years, especially assets in the computer category, and they will just sell it for close to nothing. And the reason is because over a 3-year period, they've depreciated the assets to a book value of 0, which means the asset no longer has value for the organization. And this is support agreement that they have, which is one of the reasons why most of the organizations would either just scrap those assets, or they can sell them off, or they can dispose them off as well. So we'll talk about different types of dispositions that we have for assets. And finally, we'll talk about how fixed asset integrates with the GL. I mean, most importantly, your reporting, your financial reporting comes from the general ledger. And if you're not reporting your fixed asset transactions or your fixed assets acquisitions to the general ledger, your balance sheets will not reflect the true net owned by the organization. So the fixed asset integrations, we'll talk about how it integrates with account payables through the procure to pay process, because if you are acquiring an access to a purchase order, obviously this will be one avenue. So you will need to understand how creating a purchase request and going through the approval process and generating PO and eventually an invoice and paying for the assets. And once the asset is delivered, the asset comes through into the fixed asset module. That integration is super important. We'll talk about all of the different integration options that is available here. Okay, so let's talk about the fixed asset components. So this is usually something that is described through a diagram, right? And also, I like the way the diagram is related. So the first thing that you see on the screen, obviously, is basically your fixed asset parameters. We have spoken about this, tremendously across all other modules, because your fixed asset parameter is basically where you make global settings that would apply to your entire fixed assets, your entire fixed asset module. So some features and functionality that you have there is obviously going to be your fixed asset posting profile. This is how your fixed asset subledger integrates with the ledger. Okay, super important, so that your transactions can be reflected on the general ledger. Another settings is some organizations don't acquire asset through a procurement process. So you can disable that integrations from there, from the fixed assets parameter. Other stuff that you can do would be, you know, the minimum value of an asset that you can no longer depreciate that asset for. So obviously, when we get into the system, I'll just show you around and show you where you will find some of these things as well. Okay, so that's your fixed asset parameter. You're familiar with it. We've looked at it in payables and receivable and in GL and cash and bank management module. So in this module is the same. It's not related to pretty much anything, but it contains overarching settings and configurations that applies to the entire fixed asset module, especially things like number sequences and maintenance locations and all the other stuff that I've spoken about can be done from the fixed asset parameter here as well. So let's talk about the fixed asset group, which is another thing that you see on the screen there. So if you want to group your asset and specify default attributes for every asset that is assigned to a group, fixed asset group really is the way to do it. And sorry, I'm just trying to see who is coming in. I cannot meet them. Okay, cool. So thanks. Someone is helping me to admit. So guys, just help me out whenever someone logs in, do the admin as well. Okay, so a lot of the configurations, basically as it's in the books in the depreciation profile, we'll talk about that just now, but fixed asset group basically is a way in which you group your assets and specify default attributes that will be copied to every other asset that you have created as well. Because setting up an asset, setting up some of those properties can be quite a daunting process. But if you can specify some of the fixed asset group configurations, and then when you create a book and you associate it to a fixed asset group, some default settings will automatically as well. So book, on the other hand, all right, so example of a fixed asset group would be things like vehicles, it'll be things like computers, it'll be things like buildings. So the reason this is important is because obviously a building would have same configuration, same depreciation profile, or you know, as a computer would have a separate one as well. But you would create this configuration and set them up at the fixed asset group level. Now, when we talk about a book basically is describing the entire value of a fixed asset over time, right? So generally, books are assigned to a fixed asset group. So when you create a group, you would assign it to a fixed asset group. And the books basically helps you track the financial value of a fixed asset over time by using the depreciation configurations that is defined in the depreciation profile. So you can see how a book and a depreciation profile relates to a fixed asset group. So for example, let's say company A acquires a laptop, cost 25,000 rands, right? And obviously we know that the support agreement for the laptop is usually over 3 years. Some have an extended warranty of over 5 years. So it means at the end of the 3 years, that particular laptop needs to have a book value of 0 so that the organizations can dispose them off. And it doesn't really matter even if the laptop is working, right? So the first thing, obviously, that you need to do is to choose a depreciation type. We're going to talk about the different types of depreciation types that exist, and I'm just going to discuss 2 of them because there's, I think, about 6 are common, and I'll discuss those 2 a little bit at length, so at least you guys have an idea what it means. So, but coming back to our scenario, so a company buys a laptop for $25,000 or 25,000 rands, and that asset would have a 0 value over a 3-year period, which means that if you look at how many months are basically in a 3-year period, so that's I think it's 48 months. And in 48, I'm right? 48 months, 12 times, sorry, 36 months. Yeah. Yeah, 36 months. So over divide it by 36 months, then whatever value you get is basically the amount of value that laptop will lose every month over a period of 3 years. Okay, so this is a rough calculations, but remember, I'm not an accountant, right? All these calculations would be given to you by an accountant. But if you buy a laptop for 25,000 Rand, for example, for an organization, and then if you divide that by 36 months, 36, not 35, 25,000 divided by 36, that gives you 694. If we round it up to 694.44, obviously because the financial systems, you should always go up until 2 decimal places. So I would say it's 694. So let's just assume it's 600 and let's say 700 Rand. So every month, the value of that asset loses an amount of 700 Rand. So at the end of the first month, that particular asset will be 700 Rand less the value. Choose my calculator. So this will be minus 700 Rand. And depending on obviously the financial year or the financial period that you're going to be using, some assets will be depreciated over a 1 year period, some assets will be depreciated over a monthly period, but things like laptops that is used on a regular basis needs to lose a certain value. I mean, you are expending the value of that asset to do work. So that it only makes sense that the asset actually loses value over a period of time as well. Does this make sense, guys, in any way? Okay, I'm going to assume silence means consent, but please feel free to stop me at any point in time so that we can sort of discuss any area of concern that you may have as well. So we've talked about fixed assets group. We talked about a book. We mentioned that a book allows you to track the entire life cycle of that asset. And so things like the cost of acquisition, the name of the asset, the manufacturer, or any other detail relating to that particular asset as well. And a book is associated to a fixed asset group, which means that you can basically say, oh, because this is a laptop, is basically associated to a computer fixed asset group. So whatever computer fixed asset group definitions that you have done right at the top, all of that attribute is copied to the book. And because it's an asset and is used for operational purposes over a period of time, that particular asset loses value. And that value is calculated with a formula that sits within the depreciation profile. So the depreciation profile is where you choose the formula that you're going to use to depreciate that particular asset as well. So like I mentioned, there's different types of depreciation type, reducing balance, double reducing balance, straight line, manual. I mean, you could just decide at the end of every single month, you know, what the value of that asset is by looking at the market value. So it's almost like the same thing when you buy a car from a bank and then you pay 300,000 Rand for that car. But after 3 years, you had an accident with the bank. Oh, well, I mean, an insurance, you had an accident with that car after 3 years. The insurance, you just need to know what you're insured for. Are you insured for the book value, or are you insured or cost of that particular vehicle as well? So if you're insured for the actual cost of the vehicle, whatever it is that you spend on that car is obviously what you're going to get back, but your premium will be higher. But if you insure for the book value, what would happen is, and I mean, you guys have heard the word book before. So what would happen is after a 3-year period, the insurance company would look at the current value of that car in the market today, right? Not 3 years ago. And that's what they're going to pay out for you, or, well, that would be the replacement value for that particular asset as well. Because you could just go into the market and buy the same vehicle with the same mileage, you know, with the same year model in everything, and you would not be paying the same amount of money that you pay originally when you buy it as well. So a book basically allows you to track the entire life cycle of an asset, the cost of the asset, and it also allows you to track the depreciation of the asset over a period of time. So that explains the fixed asset group, the books, and the depreciation profile. You can see on the right-hand side, the fixed assets itself, the actual fixed asset can be associated to a book. So when you go in and you create an asset, like I mentioned, when you are acquiring an asset, you don't necessarily have to do it through like a project module or do it through a purchasing module. You could just go in and say, oh, we just bought a laptop. Maybe someone just walked into Incredible Connections and just buys a laptop, and then when they come back, they submit the receipts. You want to track that asset in the system. So you go into the system and you say, okay, I've just bought a Dell laptop. It's a 7240, whatever. The value of that asset is this. This is the year of the asset. This is the year of the purchase, the month, the date and time, and everything. And then you would have to choose a book that will be associated to that asset. Obviously, you would choose a category or a book for assets relating to things like computer, and that would automatically choose a depreciation value that will be used for that asset. After 3 months, you can go into the system and run a fixed asset, a depreciation proposal to say, what is the current value of this laptop in the system? And the calculations that is used, depending on the type of calculations the organization has decided to use, will then be used to do the calculations, and the current book value of the asset will be calculated and shown to you as well. So on the right-hand side, where you have the light blue, you can capture an asset. You can capture a fixed asset in the system. And when you capture a fixed asset in the system, you need to specify a book for that particular fixed asset. And then also a posting profile. It's basically the integration point for all transactions that are related to a fixed asset. Okay. So let's talk about the fixed asset group. So the windows that you are looking at, the screen that you're looking at here is basically the fixed asset group. So the fixed asset group is the only field that is required when you create a fixed asset. So you can see if you take a look there, when you create a new group, you can see you have that buildings there. You do have a name here. None of these other things are required. You can see the major type, it's an owned building. The type of fixed asset is land and building. And you can also see auto number fixed asset is yes. If you choose auto number fixed asset, you need a number sequence. So you might have to go ahead and create a number sequence for that. If you want to barcode your asset as well, you can essentially barcode your assets by using that option there. You would have to also create a number sequence for barcodes. The property type here is where you specify it's a fixed asset. You also find that you can specify the location of that particular asset. All right, and then GIS layer ID for that asset. So if the asset is located somewhere in a mine or somewhere, so what's the replacement cost value for this asset? What is the insured value for this asset? And what is the capitalization threshold? Meaning you can't overcapitalize on this asset. So if you're never going to be able to buy a laptop for 100K, and maximum you can spend on a laptop of that specification is a capitalization threshold of, say, 25,000 Rand. That would be the value that you put there as well. So the first thing you need to create, obviously, after setting your parameters, is basically a fixed asset group. So you come into the fixed asset in the finance, you can see the fixed asset module. You create the fixed asset group. You will specify the fixed asset group here, and then the name and every other thing that is required on this particular screen as well. All right. So the value of this fields basically determine the value of the several informational fields for the assets. So books are also set up so that a default book is assigned to each asset in this group. So if you look on the top left corner of the fixed asset group window, you can see there's a book command there. So if you click on that book command, you'll be able to associate a particular book to this fixed asset group. And remember, when you associate a book to the fixed asset group, that book would automatically have a fixed assets, a depreciation profile, which would mean when an asset is created and associated to this fixed asset group, that asset would automatically calculate its depreciation for asset as well. So in this way, attributes that you set for the books can be specific to a group of assets. And these attributes also include things like service life and the depreciation convention. And you can also specify or define special depreciation allowance or bonus depreciations for a specific combination of a fixed asset group and a book. And you must assign a priority to the special depreciation allowance to basically specify the order that the allowance are calculated and when multiple allowances are assigned to the book as well. We'll look at more of this as we also get into the system as well. So let's talk about the fixed assets parameters. Like I mentioned, parameter is something that you find in the setup of that particular module. In this case, the module is fixed asset module. So if you go to the fixed asset parameters, you have two options here. Actually, the recent version has three options. The last one is maintenance. We'll look at it just now. The first one is the fixed asset. So here, you need to specify things like, do you want to calculate depreciation? Do you want to do capitalization thresholds? Do you want to automatically create depreciation adjustments amounts with disposal? And you can see some of the options here allow multiple acquisition. So meaning you can acquire an asset from an invoice with multiple lines. So if you were buying 10 laptops, right? If you bought 10 laptops through a purchasing process or a procure to pay process, and you have this option disabled, you would have to acquire the asset into the fixed asset module individually. So you have to go create one for one laptop and so on and so forth. But if you're acquiring the assets, and you want to be able to acquire all the assets in the lines, you can basically set that allow multiple acquisitions to yes in this regard. Just give me a second, just a minute. Okay, guys, so I'm back. And you can also see here minimum depreciation amount. So you can put a minimum amount that an asset can be depreciated to. Like if you say a laptop cannot go below 2,000 rands, for example, you put that value there as well. You can also specify capitalization thresholds. Basically, the capitalization threshold field determine the assets that are depreciated. If a purchase line is selected as a fixed asset, but it doesn't meet the specified capitalization threshold, a fixed asset is still created or updated, but the calculate depreciation option is set to no as well. So a lot of these options are very, very important. So you can see automatically create depreciation adjustment. So over time, you don't have to go into the system and run the adjustment. The system would automatically start calculating the depreciations for your asset. Also, if you want to consider the capitalization threshold, you can do that from there as well. You can also see calculate prorated depreciation. So all of these options can be enabled from here. Okay, so more fixed asset parameters options. As you can see, we just looked at the general option. So if you move on to additional options, you can see the purchase orders, for example. Here you can see you have the ability in the purchase orders FASTag, you have the ability to enable the possibility of acquiring an asset through through a purchase order as well. So on the purchase order FASTag, you can configure how assets are created as part of the purchasing process. The first option is named, basically allow asset acquisition from purchasing. And if you set this option to yes, asset acquisition occurs when the invoice is posted. If you set the options to no, you can still put a fixed asset on a purchase order and the invoices, but the acquisitions won't be posted as well. So you will not have a fixed asset in the fixed asset register. So you would obviously have to do posting separately from the fixed asset journal, you'd have to go in and say, okay, cool, I'm going to post a fixed asset, even though you had previously acquired it. But if you want, you can just set the allow asset acquisition for purchasing to yes. So when you post an invoice for that particular fixed asset, a fixed asset will be automatically registered as well. Okay, so so the create asset during product receipt or invoice posting option also lets you create a new asset on the fly during posting. So therefore, the asset doesn't have to be set up as a fixed asset before the transactions. The last option, obviously, is check for fixed asset creations during line entries. This basically applies only to purchase requisition as well. There's also a restrict asset acquisition posting to a specific user, so you can specify a group that can approve asset acquisition through a purchasing profile. So and that would basically be the option as well. So let's talk about the depreciation calculation. So the depreciation calculations, it's basically the method with which company reduce the value of an asset over time. Okay, well, they are not all over time, but the most company use one or more of the straight line method. So you can see the straight line service line, and you also have the straight line life remaining. And also they use the reducing balance as well. So these are actually the two that I'm familiar with. So you have the straight line service life and the straight line life remaining as well. So and then you can also use the reducing balance. So it just means that you reduce the balance of that asset over a period of time. So it could be a monthly basis, it could be a yearly basis, but the key component here is that over time, you are slowly reducing the value of the assets as you go. Any questions?
Gideon?
Yes, sir.
Yeah, I actually want to ask something regarding the fixed asset. I think on some of the parameters, the building parameters, I think you showed the location where I think that asset will be. But I want to find out something like, let's say, for example, in big organizations, does this Office 365 Finance have a feature where that item, for example, is maybe associated to a person, maybe it's issued to a person, so that maybe when you check that item in that asset in a big organization, you can know
yes.
who is issued to.
Okay, cool. That's a very good question. Yes. So there's a lot of assets related transaction that we're going to talk about. One of them is basically issue. So the fact that you can issue an asset to a person within the organizations. So obviously when you buy laptops and you keep them in the storeroom, they're not going to stay in the storeroom for life, right? So you can basically have a transaction for issuing assets. This is not a feature that I've seen on Dynamics 365. Most organizations just have a separate product that they use for basically doing asset issue, but there is definitely a way to assign an asset to a particular user within the organizations, and then we'll look at it.
Okay, thank you.
All right, cool. Any other questions?
Gideon, from my side, it's not a question, it's just a comment in terms of the depreciation methods.
Yes.
It's mostly dependent on the accounting policy of the organization. So they can choose for different asset groups which depreciation method used. So I think on implementation, they will be guided as consultants in terms of which depreciation method by the accounting policy.
Absolutely, absolutely. I think I mentioned that in passing also, like a lot of the things that you're going to do here will be guided by the accountant, all right? Things like the depreciation profile or the depreciation type that you're going to use, things like, how you're going to do the calculation. There's actually calculations that are related to each of, the depreciation type. So just remember, your accountant will give you all this information as well. Okay. Yeah, but thanks for that. Any other questions?
Hello.
Yes.
Julian, I see on my side here, there's a catalog called maintenance, and I don't see it on your side. So what is that about?
Yes. So I mentioned that as well. So the fixed assets parameter has a maintenance where you can specify a location. So if you take an asset to a specific location for maintenance, you can now specify that. Unfortunately, what is on the slide is a bit older than the actual system. So hence that maintenance option is not available. So it's just a newer version of some of the latest features that you have on your system. And on my side, remember what you're looking at is on the slide. So if I also log into my system right now, you would see that I also have that maintenance options there from the fixed asset parameter option. Okay.
Okay.
All right, cool. So, well, I think it's worth mentioning that regardless of the method of your depreciation calculations that you are going to use, the rationale for any of this method is to allocate or accrue the depreciation value of the asset into accounting period. So for example, if you are depreciating the value of an asset on a monthly basis, you need to accrue that value. So if you are reducing for our example specifically, if you are reducing the value of the laptop by 700 Rand every month, you need to post that 700 Rand every month somewhere. You need to accrue it somewhere, okay? So that over time, when you do a depreciation proposal, you can see the current allocations or the current accrual for the depreciation value. So like, okay, this asset is what, 25,000 Rands. We have depreciated 20,000. So we have accrued 20,000 in depreciable value of that asset. All right. And then obviously you can also look at the balance for each of the period to say, oh, as of January 25th, 2020, what was the depreciable value of that asset? And then you can look at that period and you'll be able to see that, okay, in this accounting period, this laptop was worth this amount, you know, and so on. So that's generally the most important aspect of it, because remember, a financial statement reports the financial position of that organization. This includes the asset that the organization owns and the value of that asset at that point in time. So just to give you a random, unrelated scenario, if you start a company, right, and then you start this company today, and then you bought desk, you bought chairs, you bought projectors, you bought screens, you bought laptops, you bought PCs and keyboards, and all of these things that you need to operate the business. And then you capture the current value of each of them in the system. Maybe the building that you're operating the business from is also you know, part of an acquisition that you've done. You capture everything in the system. 6 months later, if you decide to sell the business, right, besides the revenue, because this is also an asset, your revenue is a type of asset that comes in on a monthly basis, they also need to do the valuation of the actual business itself. So the valuation of the actual business itself includes things like, what's the current value of all of the laptop, right? What's the current value of all of the desk and all of the chairs? What's the current value of, you know, the screens that you've purchased? And then you can then come up with a number and say, okay, cool, the total asset value of this company 6 months after operation is going to be this amount. And that amount comes from the accrued depreciable value of that asset that was allocated on a monthly basis or on a period by period basis for that particular asset as well. So this is very, very, very important. And I hope that makes sense. Okay, so I'm not sure. I know in this module, there's no in-depth discussion of some of these depreciation calculations, but a straight line service life, for example, is a method that is used in a case where the asset's depreciable cost is spread evenly over the estimated useful life of that asset. And this is something that I mentioned to you as well. If the useful life of that asset is 3 years, this is usually defined by the warranty of that asset. So if you buy a laptop and the useful life of that laptop is 3 years, right? You know that at the end of 3 years, this asset no longer has any usefulness for you. And for me, I mean, that doesn't even make any sense, right? But it's accounting, right? It just means that the company can no longer associate a value to that asset, even though the laptop is still working, is still functioning. I mean, I think we buy a lot of these assets from all the laptops that we use, they were from FNB. They are super fast laptops with 2 batteries in there. But for FNB, it's 0 value, you know, on their system, and then we buy them for like 4K each. Obviously, they sell them to a third-party company, and then we then buy it from them. So for FNB to sell them to that third-party company, they probably sell them at 50 Rand, whatever the minimum depreciable value of that asset is, that's what they will sell it for, because they also need to post that transaction in their system as well. So the asset's depreciable cost is spread evenly over the estimated useful life of that asset, and the straight line method is based on assumption that depreciation depends only on the passage of time. So at the end of the first month, we took the total cost of acquiring this asset, we divided it by the useful life of that asset, which in this case, it's, you know, the warranty period, right? And then we get a value, and we need to just depreciate that asset on a monthly basis based on that value. That calculation is not entirely correct, but I'm just giving you an idea, okay? So the depreciation expense for each period is computed by dividing the depreciable cost, okay, less estimated residual value, and by the number of accounting period in the asset estimated useful life. So this is exactly what I just said. You take the value of that asset, the cost of it, you divide it by the useful life, and then you remove, and that's the amount that you remove on a monthly basis as well. So the calculation, I think, is depreciation expense equals to cost minus residual value divided by estimated useful life. So an example would be if the cost is 25,000 and the residual value is 2,000 and is over a five-year period, depreciation expense will be 3,600 Rand per year. In that case, somewhere along those lines as well. Okay, does this make sense in any way? Okay, well, if you want, maybe we can take another example, the reducing balance. So the reducing balance is actually the most common accelerated method of depreciations. And with this method, depreciation is obviously computed by applying a fixed rate to the declining carrying value of a long-term asset. So you've decided, actually, my straight line calculations could actually be seen as a depreciation value, because you choose a fixed amount and you just reduce the value of that asset by that fixed amount on a monthly basis or on a period by period basis. So it can sometimes result in a higher depreciation charges in the early years of the asset, though any fixed rate can be used, and the most common rate is a percentage equal to the twice the straight line depreciation percentage. And when this rate is used, obviously the method is usually called the double reducing balance method as well. So an example is annual depreciation rate will be the percentage of useful life over estimated useful life. And in the beginning, the percentage of useful life is obviously 100%. And if it's over a 5-year period, that will be 20%. and you just reduce on a monthly basis by 20%, or on a yearly basis by 20% in this case, because we're dividing over a year. But if we're doing it over a period, it will be 100% divided by, if it's for 36 months, divided by 36 months, and it will be the percentage that you reduce that that value by on a monthly basis. Does this make sense, guys? Or am I talking gibberish?
Yeah, I think.
Yeah, no, it does make sense, but maybe it's because I'm the only accountant. I'm not sure.
Okay. Yeah. Well, if I'm going in the wrong direction, you can maybe expand a little more for the guys. But yeah, I know, which is also one of the reasons why I mentioned that it's important that at least you must have some financial or accounting background for this to really make sense. Okay. All right. So like with everything in D365, we have a workspace. So sorry, I've just moved to the next lesson, which is manage fixed assets. So now that we understand the component of a fixed asset module, we know you have a fixed asset group, you know you have a book, you have a depreciation profile, and there are several depreciation profiles here on the list. We have 10 of them. And then you also have a posting profile, which allows you to be able to post to a GL, for example. So let's talk about managing fixed assets. So when you really want to interact with fixed assets in the system, how do you do that? Well, the first way to do that is by using the fixed asset management workspace. So obviously the workspace shows information that is related to fixed assets that are entered in the system. This includes a summary view, analytics view, the My Work tab shows summary tiles, fixed asset details, related information about fixed asset in the current company. And you can also add, you know, like the Power BI analytics sections directly in the workspace, so you can see some of the stats, you know. Basically, obviously, this is done using something called Power BI. I'm not sure if you guys are familiar with Power BI. It's a Microsoft-owned visual analytics tools. And then it would automatically add any report related to that fixed asset for that company in the workspace as well. So workspace is a way to consolidate all the activities that you perform, and it's usually defined by role. So if your role is to just do a fixed asset entry, this is all that you will find here. If you take a look, I'm not sure if you can see that it's got two different tabs here. The first tab is My Work. It shows you assets that are not acquired yet. You can see 4 assets hasn't been acquired. Assets that are acquired this year, it will automatically show that. Disposed this year, it will show that as well. And it would also, if you want to see your fixed assets, you can click that. And then here, you can also see depreciation proposal, fixed asset proposal. And then if you take a look at the related information, you can see the fixed asset basic reports, fixed asset transactions. And in the middle here, also, you can see some of the details. So you can see a fixed asset number. So it's BUIL0001. It's a building. It's the corporate headquarters. It's located at the HQ. And the responsible person is Ted Howard. All right. And obviously, you can see building 00003. It's a warehouse site 1. This is the location of the warehouse site. You can see the person responsible for it as well. So like a facility manager. And if you click on that asset, you can look at details, you can look at books, and you can look at the current valuation of that particular asset as well. Okay. So the fixed asset management summary, this tiles, the summary session gives you an overview. Obviously, the things like metrics about assets that are not yet acquired, and assets that have been acquired, assets that have been disposed of this year, and then also has a quick navigation to the fixed asset list page if you want to. And you can also get through to things like the batch depreciation proposal and the fixed asset journal from here as well. Okay, so the find fixed asset sections basically lets you quickly find or search for an asset by providing the fixed asset number or the group or the name or the location or the person who's responsible for it. So all assets that match the search criteria will appear in the list, and then you can look at details, books, and valuation for that asset as well. So the fixed asset valuation page obviously lets you see on one page, the most important information about a fixed asset. This also shows details for all books that are associated with a fixed asset. It is possible to have more than one book associated to a fixed asset. For reporting purposes, you might have a different book for reporting for legal report. You might have a different books for federal. And in this case, because this is a US-based system, you can see they have a different book for the federal and the states. And also they have a straight line depreciation type on the list as well. So because you have multiple books for a fixed asset, there's a possibility that the balance will be different across each of those books, which is why the current asset valuations will show you some of the details about the books that is associated to that fixed asset as well. So the balance options at the upper left corner of the page shows the current valuation for each book that is associated with a fixed. And you can also drill back from the values to see the detailed transactions that make up the summary value as well. So valuation profile, obviously, this is an options that you get at the upper left corner of the page, which shows the depreciation schedule for each books that is associated with the fixed asset. And here you can view the amount based on either accounting or reporting currency as well. So if you look at it, you can see the VIX. And it will show you the current value in that and see assets in different currency as well. Wait, what's time? Okay. So the fixed asset form, it's probably going to be the most popular. It's got about 7 or 8 different fast tabs. You can see there, this is where you actually create a new fixed asset. If you go to fixed asset form, you can provide locations where a company can record information about the managed fixed asset. This table shows both financial and non-financial. Obviously, non-financial information refers to things like physical location of the assets. When the information include things like asset name, information's barcode, locations. We've sort of spoken about this or also previously as well. So you can see the structure fast tabs indicate the relationship between the fixed asset and other assets, either as a main asset with underlying component or as a component assigned to another asset as well. So sometimes assets are built up with other assets as well. When we talk about the asset disposal, we'll also look at the options where sometimes you can sort of break an asset down and dispose of one part of it and still retain other aspects as well. Okay, so this we will discuss in the value adjustments with transactions, where you can do write-up adjustment, write-down adjustment, and also do revaluation as well. But if you want to capture a new asset in the system, this is where you do it. Okay, so let's talk about some of the general transaction types. Obviously, the first will be fixed asset acquisition, second will be depreciations, and then third will be disposal as well. So Dynamics 365 Finance offers the following detailed transaction. So basically, acquisition adjustment. So you might acquire an asset, give it a particular value, later realize that that value is not correct. You can do an acquisition adjustment. Obviously, depreciation and depreciation adjustment is the same. If you feel like the calculations that you're using for your depreciation profile is not correct, you can do the necessary adjustment to reflect the current book value of that asset. And then there are situations where you do extraordinary depreciation. This is basically depreciation adjustment that is outside of normal depreciations for the assets. You can also do value adjustment. You can increase the value of the asset, and that does happen when a particular asset gains more value, book value. You can write down the value of the assets when it loses value, and then you can do revaluation. Obviously, revaluations would not require any manual write down or write up. It would just use the current fixed asset depreciation profile to do the calculations and revalue the assets and tell you the current value of that asset as well. So for disposal is also one of the transactions. You can basically dispose of an asset by selling it or by scrapping it. Hence the reason why some company would basically just destroy the asset for whatever reason, you know, or dismantle the assets and remove certain item from the asset so they can destroy whatever is left as well. Okay, so fixed asset property type. The fixed asset group, by using the value in the property type fixed field to describe the fixed asset to be one of the following. So it could be fixed asset, continuing property, and other. So obviously, fixed asset is a regular asset to be processed as usual. Continuing property is a property that exists for inventory purposes only, such as telephone, radios, or mobile devices that are less than capitalization threshold. So typically, a service life of 0 is entered for continuing property assets, and continuing property assets are excluded from the valuation report that you reconcile with the general ledger. So what this means is there are certain assets that are basically inventory assets. You are selling them, you don't, you are not using them. Remember, a fixed asset is any equipment that you are using, you know, for operational purposes. But if you sell them, it's no longer a fixed asset, obviously. So the value of that in the asset module will be 0. Hence, the a typical service life of 0 is entered for continuing property assets as well, because this is an inventory that you carry on a regular basis and you sell them off as well. So it's actually important that you understand the distinct difference between assets that are, so for example, a vehicle could be an asset for a company that doesn't sell cars, right? But if you carry inventories of cars and different types of vehicle, that is not an asset. It's an inventory. It's a continuing property. So it's a product that you're selling. It's really not an asset for the company. Okay, I hope that makes sense. So fixed asset statuses. Assets can go from one state to another for whatever reason. So the status can be open. This is set when an asset is acquired. Suspended when you assign the asset manually. Closed, assigned to depreciable assets when the net book value becomes 0. So, you know, when the asset is done, ready for disposal, you change the status to close. Sold, when the asset is assigned to asset disposal off by sale, not by scrap. And then obviously scrapped, assigned to asset disposal off as scrap through a journal as well. So all of these statuses are super important. If an asset is open, it's acquired, and it's being used on a regular basis. If an asset is suspended, it's manually assigned. And if it's closed, it's reached end of life. It has a book value of 0. If it's sold, it's been disposed of by sale. If it's scrapped, it's been disposed of by scrapping through the scrap journal as well. Okay, what time is it? Maybe it will be a good time for a 15 minutes tea break, right? Or should we just continue and finish off once and for all? All right, let's take a break. Let's take a break for 15 minutes. I'll see you guys. Oh, Kyle, I see your hand is up. You have a question?
Yeah, I just want to find out something. In the D365, do you have, because now I hear you talking about, especially in general transaction types, and even now here, fixed asset status. I don't hear you talking about anything about like writing off an asset, for example, when it's lost or thing on in those kind of conditions. Does D365 Finance have those kind of features where you do that, you write off assets.
All right. So I'm assuming that assets will be categorized as closed when an asset is written off. But one thing that we haven't really discovered or discussed is that the fixed asset module or LC, what is it called? D365 itself is extendable. Okay. So you find that some statuses, like the ones that we've discussed, some company don't call it, they don't call it closed, they call it scrap, or they call it write off. Okay. So you can go into the cheat system and then you can change the configuration settings in the UI to write off. All right. So these are some of the things that the D365 developers do. They have the ability to sort of, modify the look and feel of the system. But the configuration that we are currently looking at right now, it's actually a vanilla configuration, which means this is the, standard out of the box feature that Microsoft has giving us as well, and it can be modified. So even those statuses that we've just looked at, you could decide that you want to change them completely and have new statuses according to how your organization actually do it. Make sense?
Okay, yes.
All right, cool. So I will see you guys at 10:50. And guys, please make sure you come back early so we don't waste too much. Okay, and we are back. All right, is everybody back? Okay, perhaps we can carry on. Can you guys just indicate either by raising your hand or just unmuting and letting me know that you guys are Sydney? Are you there? All right, cool. Thanks, Nasabata. Brandon Sipo, thank you. Okay, Npo, thank you. I'm missing Carl, Sydney. All right, Jean-Marc, thank you. Jean-Marc, are you back from Lesotho? All right, Carl, thank you.
Yes, sir. I came back yesterday.
Okay, awesome. Awesome. We will chat. Just give me a call sometimes before the end of this week so we can chat.
All right, cool. I will do.
Awesome. Okay, cool. So guys, let's carry on. I think the last few slides are pretty straightforward. So first, obviously, is the fixed asset life cycle. This is the process of acquiring an asset and getting rid of an asset. So, and everything in between that process. So obviously, the first thing on the list here is create a fixed asset. You use the system and you create a fixed asset. When you create a fixed asset, the one thing I learned very early on during in the AX Dynamics AX world was that to increase an asset, you debit, and to reduce an asset, you credit. I mean, I would have imagined that to increase an asset, you credit, but it's just the way the accounting term actually works. So you debit after the asset is created, you debit the asset to perform the acquisition and the acquisition adjustment. So whenever you perform an acquisition or an acquisition adjustment, you actually increase the assets that you have. So you debit the asset as well. And then you create the asset to perform depreciation and depreciation adjustment or extraordinary depreciation based on the depreciation profile. Remember, we spoke about different depreciation types that are usually part of the depreciation profile. Obviously, after you've created the asset, you've increased your asset value, you perform depreciations or depreciation adjustments or extraordinary adjustment. And depending on the type of assets, government rules or market, you may want to perform value adjustments such as write up, write down, and revaluation. So there are so many rules and regulations that governs the different types of adjustment that you perform on the asset as well. And obviously, this will determine the valuation of that asset. So, and then finally get rid of the asset via disposal, either through sale or scrap, or alternatively provisions for reserve when you sell to keep the value in the balance sheets account as well. So this is a sale of fixed asset using a free text invoice. Luckily, this is something that I actually showed you guys when we looked at the accounts. When we look at the accounts receivable process, we actually created a free text invoice. So a free text invoice is one way in which you can sell off an asset. So this lesson shows the process for selling a fixed asset on a free text invoice. Obviously, the process is very simple. There just can be a few gotchas that you need to be aware of. First of all, so the dimensions selected on the free text invoice are those of a customer. So the system does not take the default dimensions from the free text invoice. Next is dealing with all of the different asset books. So the lesson focuses only on a single asset book, which makes sense. But we've looked at the possibility of having more than one asset book. The one the post general ledger, which is the current posting layer, which is the normal posting layer. And the postings to the tax layers, they are not discussed here as well. Okay, posting layer is something that we haven't discussed. But you can have an accounting systems with multiple layers, and the current layer is usually the default layer where all transactions are posted into, and it's usually the layer where you basically do financial reporting for the organizations. Or alternatively, you can also have like another test, posting layer specifically for taxes and for regulations. So if some of your transactions requires some of these postings to reflect on the tax layer, you would also need to do like a double entry posting on the tax layer as well. Okay, so the fixed asset posting profile is never discussed in this lesson, and the postings for the sales of a fixed asset are complex. So this lesson just walks through each of the postings and the vouchers and how they're determined. You can use the lesson for the details, because there's always someone that asks or that just wants to know how to do the same, and that is very simple. So obviously, when you sell off an asset, that asset is removed from your book, and a profit or loss is recorded along with an account receivable entry for selling for the selling price. So there will be some sort of money that is posted in your account receivable. So you create a fixed asset selecting the customer that is purchasing the asset. You select the fixed asset and the line details. You add a description and asset sales price. So obviously, because of the test invoice, you are able to determine the price on the line itself. The line is not based off of some inventory price list that is set for that particular item. And then you post the free test invoice in this regard. All right, disposing of a fixed asset as a scrap. Obviously, it's best to when the asset is no longer needed and that asset needs to be disposed of. Excuse me. You can basically dispose of the asset, especially when the asset requires scrapping the assets as well. So obviously this journal is different. There's no dollar amount in the line, so you're not posting to any accounts. There's no income or profit or loss. An additional may be added as a depreciation adjustment if the depreciation was not up to date, obviously, just to finalize the posting of that asset as well. So the demo ones obviously have not been depreciated in 5 years. So funny thing is, when you post that, you don't want to have to explain why you can't scrap an assets that are in the system as well. So you can use a fixed asset journal. The transaction type will be disposal assets, and it's best to create a new asset. The demos only also have been depreciated in the last 5 years. Okay, so create a fixed asset journal, select the transaction type, which is disposal scrap. Now, and this is actually an exam question. So when you sell off an asset, you use a free test invoice. When you dispose of an asset, you use a fixed asset journal. And if the journal doesn't exist, you know that you have to create it. Otherwise, you will not be able to dispose of an asset through a scrap as well. Select the fixed asset in the line or create a disposal proposal. Scrap the proposal if multiple fixed assets are to be scrapped. Optionally, enter a reason code and post this to the journal as well. This will finalize the fixed asset disposal through scrap. Okay, so let's talk about integrations. So you're going to get a lot of questions on the integrations on the exams, questions that you're going to get, and it's important that you understand how your fixed assets integrates with fixed asset transaction type. Can be posted in the general ledger in using the general journal page. And then you can also use journal in the fixed asset to post fixed assets transaction. So on the fixed asset posting profile, which if you remember the fixed asset component, when we looked at it earlier, the only way your fixed asset subledger module is integrated to the general ledger is by using the fixed asset post profile. On the fixed asset posted profile, you define the main account that fixed asset book transactions are posted to. I'm still waiting for my system to come online. I'm not sure why it's taking so long today. Yeah. Let me just try another one. All right, so with the GL, you define the main account that fixed asset book transactions are posted to. So if you have 10 books, you can have a single main account that all transactions will be posted to per book. You also specify the type of fixed asset transactions that are posted to each main account. You can create various combinations of main account for fixed assets. And obviously, depending on the level of details that you want for fixed asset in the general ledger, main account can be based on transaction types. So all books related transactions can also be posted into a single main account as well. So the second thing, obviously, on the list here is the inventory, right? So inventory is basically a product or item that an organization keeps for sale. So if you take a lot, for example, all the items that you have in your warehouse are basically your inventory item and you sell them to the public. So when you acquire a fixed asset and you happen to be the seller of that fixed asset as well, that requires an integration to the inventory module. So in the inventory journal for fixed asset, you can enter the acquisition of a fixed asset that the legal entity has produced or constructed for itself. So either you keep an inventory that is supplied by another company that manufactures the product, or if you make the product yourself. But the key and the most important thing here is that during your asset acquisition, you choose an asset in the legal entity that is produced or constructed for that legal entity. And you can then transfer inventory item to fixed assets, either as an acquisition or part of an acquisition as well. So you're basically doing movement of items from the inventory into the fixed asset. So there are several posting rules that are set up on the posting page in the inventory management control. The decrease in the inventory when an acquisition is posted obviously increases, the asset in the assets account. And you don't always decrease inventory when you post invoices that are related to fixed asset. In some cases, the fixed asset might be purchased for an internal use. So an example is a laptop that is purchased for the sales department. And when you work with purchase orders, you can use items that are set up for both resale and internal use as well. So this is an inventory configurations, which is why I'm not going to go into depth. But sometimes when you create, the key point here is that not always do you decrease an inventory when you post the invoices in an acquisition of an asset through an inventory. If the item was manufactured specifically for internal consumption, the actual acquisition process is just a process, and there is no invoices that are posted related to the fixed asset in that case. But when you create that inventory item, in the inventory management, obviously you have one or two options. One is for resale and other is for internal use. So in this case, this item has to be set up for both resale and internal use for you to be able to acquire them from the inventory as well. So we've spoken about the integrations with account receivables. The integration of fixed asset with account receivable uses posting profile that are set up in the fixed asset. These posting profiles are activated when a fixed asset or a bulk or a fixed asset transactions that are selected for a customer invoice before the customer invoice is posted. So this makes sense if you're selling off an asset to a customer. It would activate the posting profile when when a fixed asset or a bulk and a fixed asset transaction types are selected for a customer invoice before the customer is posted. So because fixed assets aren't part of the inventory management, you must use the free test invoice page when you sell off a fixed asset. We just looked at that. So that's the integration point between account receivable and the fixed asset module as well. So for accounts payable, obviously this is vendors, fixed assets that are for internal use are set up so that they have an account type of fixed asset receipt. So when you purchase a particular asset from a vendor, when that item is delivered, you must basically you must have an account type of fixed asset receipts. This account type is used to track the receipt of the fixed asset. And when you post the vendor's invoice, okay, so now you are paying the vendor for this asset, you can use the fixed asset receipt account if any of the following conditions is true. One, if the invoice line contains an existing fixed asset for internal purposes. Two, the new fixed asset checkbox is selected for product receipt line that is posted. So you are literally receiving that product as an asset. And then three, you can create a new fixed asset checkbox selected for the vendor invoice line as well. So all of these options are available and can be used as well. Obviously, there's integrations through procurement and sourcing. You can have a requisition plan for asset that you will be purchasing for either projects or for internal use. So we spoke about project management earlier. Basically, when an asset is being built for an organization, this asset is the cost of this asset that is being built is accumulated into a WIP account. So a WIP is a work in progress account. So literally think about it this way. If you are building a property for a business and you're just keeping record of all the amount that you're spending on the land, on the excavations, on the foundations, on the walls, on the roof, on the windows, you're literally just accumulating all that cost into an account. This is usually called a WIP account. And then when the asset is fully built and completed, you can then eliminate that WIP. So meaning you are eliminating that cost, but that eliminations will result into an asset being created into your fixed asset module as well. So, and because every fixed asset that you acquire needs to have a cost, the cost of that fixed asset comes from the WIP, work in progress, which you have accrued over a period of time. So if it takes you 10 years or 2 years or 5 years to build that house, for as long as you're keeping record of the cost of everything that it takes to build a house, when the house is completed, then you can eliminate the WIP and then create a fixed asset of type building and the cost will be the value that is sitting inside that particular inside the WIP account as well. Obviously, budget also applies here because you want to budget for asset that you need. If you anticipate that you would be hiring more employees in the next quarter, for example, you might have some sort of budgeted asset requirement for those employees, be it laptop, desk, chairs, in pretty much everything that they need for them to work. So in your budgets, we haven't talked about budget. When you do your budget plan, you can do a budget plan for asset acquisition in the next fiscal period or in the next fiscal year as well. And obviously asset leasing, sometimes you can lease an asset to other organizations that are part of the same system. So this could be through an intercompany transactions where an asset is leased from company A to company B, and company B is a sister company to company A. So there's some intercompany integrations also in that regard. Okay, so this is a procurement and sourcing module. This is the fixed asset. Oh, sorry, this is the fixed asset parameter page, and here specifically we're talking about the procurement and sourcing, and you can see the purchase order. We have spoken about this extensively also. Obviously, the first option is allow asset acquisition from purchase order. So if you want to be able to acquire an asset through a sourcing, a procurement and sourcing, you need to ensure that that option is turned on. You also can you can see that option there. You also can restrict asset acquisition posting as to a particular set of users. You would have a bunch of groups there that you would that you can assign as an approval of asset acquisitions through purchase orders. You can also create an asset during product receipts. So if you go through your procurement process and your vendor delivers your products or your assets, when you do a product receipts, you can automatically create an assets, and you can do that by enabling that as well. You can also check for fixed assets creation during acquisition in that option, so you can enable that as well. So you can also enable reason code. So when an asset is scrapped or when an asset is, when the status of an asset changes, for example, there are a few reasons that you can specify. You can define some of the reason code in the system and then just use them. These are some of the reason codes. So if you're performing an acquisition adjustment, depreciation adjustment, and so on. It's just a text that you associate to an asset transaction, especially when the status of that asset actually changes as well. Okay, so you can basically just select the options here for asset change, the reason code that is allowed, so that when the status of that asset changes, those reason code will be available for association to the asset change as well. Okay. So create a fixed asset budget and transfer the budget to the budgeting module. So this, in order to transfer depreciation expense to the ledger budget in the budgeting module in D365, first, you need to create a new journal name prior to using the fixed asset budget transfer functionality. So you can create this journal name in our normal journal name setup in the general ledger as well. So you need to have your basic budgeting already set up. We have not spoken, we haven't done budget. We will do this in module 7, and then we'll talk about how to configure budget. Then you would use the fixed asset budget journal to navigate to fixed asset budgets and create new journals to go to the line as well. So you do have the ability to be able to create fixed asset budgets and transfer the budget to the budgeting line. So these options just need to be enabled here as well. Oh, okay, cool. I actually didn't know that this was coming through a little later on. So I mentioned that one of the integration points of a fixed asset is through project management and accounting. So Microsoft Dynamics 365 Finance and Operation has a project management and accounting module, which is specifically for projects that reports to the general ledger. So it's a combination of two things. It's a project management tool, so you can create different types of project, time and material, fixed term projects, and so on and so forth. Also, it has an accounting element of it, which it has the ability to post transactions to the GL relating to that project. And one of those example of those transactions is obviously the elimination of a fixed asset for the project estimate. So, which is the concept that I really explained to you earlier when you're building an asset, most especially things like so you can use it when your organization is constructing a building, or when they are basically constructing some type of machinery or an equipment that is going to be used by that organization as an asset. So as you buy the parts and you put them together and labors are charged, hours and time is charged, you accumulate and you accrue that cost into a WIP account. And then, so you can think of it as a box where you store all the costs associated to a particular project or activity. So if you're building a back house and you just keep all the costs, what it has costed you so far into that particular location, when you're done building that house, then you need to eliminate that box, right? So when you get rid of that box, this process is called the elimination process. So you eliminate a fixed asset from a project, and this should automatically create a fixed asset for you in the fixed asset module. And the fixed asset will be the actual product that was produced during the project activities for it as well. Okay, so essentially what I'm trying to say is that if you are building a property for your organization and that property is going to be used by that organization, you can keep a record of all the cost into a WIP main account in GL, right? And then when you are done with that project, you need to eliminate that WIP account. And the way that you eliminate by the WIP account is by creating a fixed asset. So you eliminate the assets. Eliminating assets removes it from WIP, where it was carried within the project, and transfer the cost to the fixed asset that was produced during the process as well. So super important. The concept of elimination is really just removing the WIP value associated with the asset from the project and transferring it to the asset itself. So the asset is created initially as a holding. So when you start building, the house asset will be created as a holding while you accumulate the cost in the WIP. And obviously, we know also that when you are working on a project, you are acquiring either services of a vendor, so which is why the accounts payable module is also part of this. So it's not only the project module, it's also the accounts payable module, which is part of this. So the vendor obviously is linked to the project, and it becomes a cost associated to that particular project. And the vendor payments and vendor invoicing and transactions related to the vendor would be part of the accrued cost for that project. And that's how you determine the current WIP value, work in progress value. And then when you eliminate that WIP from project, it automatically creates a fixed asset for you, and the asset will change from holding to now open in the fixed asset module as well. Okay, I hope this makes sense. Here's the process for eliminating a fixed asset from a project estimate. The project must be an investment project. There are 5 different types of projects that you can create in project management and accounting. The asset needs to be purchased and invoiced and linked to the project. So anything that you're buying, any materials that you buy, it must be linked to the project. The asset must be created but not acquired. So if you acquire the assets, remember, once an asset is acquired, it has a book. Once an asset has a book, it has a depreciation profile. And a construction project could take 6 months, and you don't want to start depreciating asset that you haven't fully acquired yet. So the key here is that when you are constructing an asset through the investment project, the asset must not be acquired yet. An estimate for the project is created, posted, that includes the vendor invoice transactions. Obviously, this is based on forecast. So the builder would tell you, the builders will tell you, oh yes, I'm going to charge this amount to build the walls. I'm going to charge this amount for the ceiling, for the roof, and so on and so forth. And these are basically the project estimates. And when percent complete is 100%, the asset can be eliminated. And then, the WIP can be eliminated and the asset can be created in a fixed asset product as well. Okay, so technically this brings us to the end of this module. There are some lab activities. In this lab activities, I think you are going to create a purchase order for a fixed asset, and then you are going to create a packing slip to confirm the receipt of the fixed asset, and you're going to acquire the asset by posting the invoice journal, and this will automatically and this process will show you how to acquire a fixed asset through an accounts payable invoice journal process as well. The estimated time is obviously 15 to 20 minutes, but obviously I would advise that you take your time as well. There's also a video activity for this particular module. You can see it on the GitHub website. It's just an activity that shows you 2 depreciation methods for fixed assets. So you can download the video, let me actually see if I can show you guys where to find that video. So if you go to, okay, if you go to finance and operations, and then you go to instructions, and in instructions, you go to labs. Okay, not here, I think might be in images. Also not here. What images are these? Okay, these are just reports. I know the video is somewhere. Let's look at all files. Yeah, lab 1 starter. Yeah, not that. Let's look at that. For some odd reason, I can't seem to find the video, but I know the video is it's in here. Maybe if you download the student handbook, you'll find it in there as well. Okay, but I mean, the videos are pretty straightforward. It just shows you how to perform 2 depreciation method, and I think is the straight line service life, and then the reducing balance as well. All right, I'm gonna open the. I mean, technically, guys, I actually thought today was Thursday, so I'm actually quite happy to know that today is not Thursday, it is Wednesday. So we still have 2 sessions this week. I would advise that we do tomorrow again, and then we do Friday and see whatever is left, and then we can determine how much time we're going to have for next week as well. So I'm going to open the floor for questions. If you guys have any questions, this will be a good time to ask them, and then we can just deal with them. And then the other half an hour that is left, you guys can try complete the lab for this exercise as well. And also remember, guys, you have the learn.microsoft.com. I think it's learn.microsoft.com. D365.com. And I think D365. And then this would take you specifically to the Dynamics 365, Microsoft Dynamics 365 documentations. You can see there's quite a lot of different modules. That's the project operator, the supply chain management. But what you're really looking for is the finance. Okay. So you can look at all the different options available. There's training and there's documentations. I always love going through the documentation. The guided tour is usually a nice marketing material that Microsoft has produced to help you discuss the features with customers as well. You can see the unified business process and so on and so forth. This might not be relevant for you now, but obviously when we start doing project, it will. And if you go to the learning part, so the learn.microsoft.com actually has great tutorial that you can go through. So you can use this as a supplemental material as well to just help you walk through some of the areas that we may have not touched during the session as well. And there's quite a lot of them here, and you can see all relate to. Let's look at some of them even for 7 hours. So work with account receivable and D365 finance. And you can see that it tells you who this is for. It's an intermediate level for functional consultant or business user using D365 finance, and it's part of the finance and operation module. And these learning parts also help you prepare for the MB310, functional consultant. And prerequisite is basic finance process, the ability to use finance basis, general understandings of sales, order invoicing. And then when you click on the start, it takes you to, it's just the compilations of different contents and videos. Occasionally, some of those videos are basically YouTube videos as well. So you can see these are stuff that we have spoken about, payment schedule. If you go onto the payment schedule, you see the options that you need to configure there, and you get a nice window that shows you how to do that, account receivable, and then, it shows you where to go. You can see there payable schedules. So this is something that is quite useful that you can use. And I mean, if you click on it, it shows you all the different walkthrough and how you can go about it as well. And it also shows you instructions that you can use to sort of follow through and set up some of these things as well. Terms of payment, you click continue. It's also going to show you that as well. Sometimes you get a nice video, cash discounts. And the nice thing is that everything is in one place. So it explains to you first what a cash discount is. And it tells you, 5 days, 10%, 10 days, 5%, 14 days, 2%. So cash discounts of 2% when the amount is paid within 14 days. If you want the amount to be paid within 5 days, you have a 10% discount. And it shows you how to create all of the cash discounts as well, and how this is can be integrated in the settlement specifically. So you can see payment fee. If you click next, it's going to show you what payment fees are, how to set it up. Set up credit card payments, services. You can see there how to capture credit card, do authorizations, and also you can see some of the other transactions related to payments as well. So yeah, use the learn.microsoft page. It would really help out to cover some of the other modules. If you want a place where you can see all the D365 finance module, then you go to the documentation. So you can see budgets. I think we'll be doing budget next. You can just prep yourself by going through some of the things that are here as well. And then you can download this entire book for D365 in PDF. It's quite big. The last time I checked, I think it was like 48 megs or something like along those lines, and over 1,000 something pages, if not more. Yeah, and you can use this as supplementary material for things that you don't understand. And obviously, finally, YouTube is really great for video resources. If you learn better by visual, you should definitely look at the YouTube videos. But Random? Okay, that's an old hand. You've just dropped a hand.
Oh,
Kao,
hello?
yes, go ahead. You have a question?
May you please send it on the group chat?
Yes, we can hear you.
Can you send it on the group chat, please?
Oh, you mean the, okay, cool. I'll share it for you
on the
now.
Teams. Yeah.
Yeah, this one. So I will share yeah, this one is fine. But remember, there's a home page for it, account receivable, so that you start from the beginning. So this is you can see all of the instructions here. Make sense? So I'll share this and then put this on the group chat. I really find the Learn website very useful. I mean, a lot of the training materials are there and they are free. And then you can see even some of the lab instructions are also here as well. You can see, and it tells you how to launch the virtual machine. Obviously, you don't have the virtual machine, but you can use your machine logging. So you can just skip the first few sections there where you log in. And then setting up a posting profile, you can see, go to USMF, account receivable first, create a posting profile, type prom, description, type promotions. So I find these instructions here a lot more detailed and a lot more easier to go through as well, okay? Because you see what you're doing here, you are setting up a posting profile, and then you're creating a customer payment terms. So on the 17th of every month, you pay your customers. And you have a payment terms net 45 days. And then you have a 15 days, 5% for GLS. And I'm assuming GLS is the company. And different method of payments. You can see bank is one of the method of payment. Direct deposit is another method of payment. And then create customers with payment fee. So you create a customer and you associate all of those things to the customer. You create a payment fee, customer payments here, and then you create a customer here. And then in the consequence lab, you would also have instructions on how to perform some transaction against that customer as well. So yeah, so this lab's super important. Use it, it will save your life. All right. Any other questions?
Hello, Gideon.
Yes, Carol.
Oh yeah, can you also please share that the link for that the manual that you just opened?
Yeah, same.
And then
okay, cool. So
yeah,
so this is gonna take a while to download, but let me just share the link. Yeah.
Yes.
But
Okay.
you know, the entire Microsoft documentation can you hear me?
Yes.
If you go to the documentation from the finance, right? And you see, this is the entire documentations for finance, right? You can see everything from budgets to cash and bank here. You can download a PDF. And obviously that's what I'm downloading, so I don't want to do it again. It takes about 5 to 7 minutes for it to be downloaded. Okay. Yeah, I'm not going to do the download because I'm already downloading it here. But what I'm really saying is that you can go to the actual finance documentation where everything is. You can see D365 Finance, and then you can just download the PDF.
Okay, and I also have a question.
Yes, go ahead.
Okay, I think you explained about the WIP account when a company maybe undertakes maybe a construction project. So I just want to find out,
Yes.
how will it work now when, let's say, for example, you are a construction company and then you have to acquire some fixed assets in order to maybe build a building as part of maybe the services that you are providing. How will that process work now?
So you can set up that construction company as a vendor, and that vendor will provide services for the project. So there is a project management module that is part of D365 Finance and Operation. Okay, cool. My system is finally up now. So the project module, if you come to the module here, you can see project management and accounting. There are 5 different types of projects that you can create here. So you can create a time and material project. You can create a fixed term project. You can create an investment project. You can create a cost project. And then, so the investment project is the one specifically for that allows you to be able to acquire. It's the one that allows you to be able to acquire you just set up a vendor in the system for the construction company, like every other vendor that will be providing services for you. Obviously, because it's a legal entity on its own, it needs to keep financial transactions in its own book. So you can't miss and match. I mean, it's possible that that particular company is also running from the same system, but the key here is that they need to just be a vendor that is providing services for the project. Make sense?
Okay.
Yeah. So let's say you are building a head HQ for a company, right? And you are ABC Corp or ABC Corp, like so. And then you need material, obviously. So materials will be things like sand, bricks, land. Okay, maybe land is not a material, it's another asset that is needed, but you know, and then you need labor, right? So labor is provided by, maybe you're gonna have a different company do the foundation, or maybe an engineering company do the engineering for the building, the actual build, another vendor, the roof, another vendor, the windows, you know, another vendor. So what you just need to do is, in your project, you need to build a list of costs or materials that you need, and then you need to build a list of labor that you need as well. So if that construction company happens to be a construction company, it'll just be a build vendor. And when these guys, let's say they charge you 150 million, for example, and this company is going to charge you 200 million, and then this company is going to charge you 15 million, and this company is going to charge you 25 million, right? So 390 million, I'm assuming 390 million will be for labor, okay? And then let's say you need another 200 million for material, right? 200 million for material. This would be your forecast, you know, for the build. When you complete the build, maybe you ended up spending 410 million and then 225, 25 million. The total will be 635 million. And then when you, so your WIP, when you are done, your WIP will be sitting with a cost accumulated or accrued cost of 635 million. And then when the building is now completed, finalized, ready to move in, then you eliminate these assets, and you would end up with a fixed asset in the fixed asset module, and the current cost for that fixed asset will be 635 million rand. And then obviously you can apply the depreciation profile and book value for that building respectively. So that would then determine how, but the project type that allows you to do an elimination is an investment project. So if you come in here, you can see it's the investment project. So you will specify the project name, so maybe HQ build. you will specify the project group. You guys know what a group is now. If you want to, you can just go and create more groups there. And then you can be doing this build for a customer, all right? So because you are also a customer, you can specify, and then you will specify the project manager and then the start date. So when you create the project, you will then see there's a lot of places where you have vendors that are providing services for the projects, you know, and so on and so forth. Yeah. I hope that makes sense.
Yes, yeah, but okay, I just want to confirm. Are you saying that, like, because I was asking if you are building it for a client, not for yourself, is the same will work that way as well?
Yes. So if you are building it for a client, I think so every project has a sponsor, right? There's someone who is always paying for that project, right? And sometimes the person paying for the project can be the same person who is doing the build. So you could just, and it's an optional property that you need to put there, if you know what I mean. So you don't have to specify a customer, but the point that I'm trying to make is that as part of the new project options that is here, you can specify who you're building it for, but it's not a required property as well. And if you're building it for yourself, Contoso, you can just choose Contoso as the customer, because later on here, you need to also create what is called a project contract. And a project contract basically will contain all of the people that are sponsoring and that are basically going to be providing the funding that will be used for the build. Make sense?
Okay, yes, yes.
All right. Any other questions? And like I said, remember that this doesn't necessarily have to be like a building. This could be a construction. It could be a furniture that you are making that you're going to use in the company as well. So this is that project contract ID that you need to specify, which just specifies all the sponsors and you know, and how much the sponsors are bringing. Obviously, we're not going to go into project management and accounting, just showing you. Yeah. Okay. All right, well, if there are no further questions, let's end today's session here. Oh, Brandon, I see your hand is up.
Sorry, would you be please put it on YouTube?
Yes. We will definitely be uploading this to YouTube, so you are more than welcome to go back and watch it again.
Okay, thanks.
All right, cool. Okay, guys, enjoy the rest of your afternoon. Thanks for taking the time out. Please practice. I have equipped you with everything I know that I think can help you grow your skills. So yeah, practice, and make sure you gain some hands-on knowledge. And I'll see you guys tomorrow, same time. I'll let you know what we'll be doing tomorrow. I think budget. Cheers.